XFA2, this is your boy KB and welcome back to my YouTube channel guys. I would like to start by saying thank you to each and every one of you that managed to subscribe to my YouTube channel guys. Let's keep on growing. We are on road to 100 subscribers guys. Now on today's video guys, I just want to talk about these mistakes that normally traders tend to do, and I want you to also learn from them. And if you're doing them, stop doing them. Stop doing them. In a way, it is going to improve your trading journey significantly. You're gonna improve in your trading journey guys. So these are the mistakes that I've done also. I've learned from them and I'm willing to move forward. I'm learning guys. Learning is part of growing guys. And if you don't learn in your mistakes, you are not growing guys. You are simply going down. So let's begin with this lesson guys, and make sure you write this thing in your head guys. Make sure you grasp these things in your head. Don't do them, don't repeat them, don't you ever do them. Even if you can try, don't do them guys. Number one guys, the number one thing that you must not do guys as a forex trader. I've been a trader for about 4 to 5 years now. I would say 4.5 guys. Throughout this journey, there was a time where I was starting out. I was trading, but trading without a strategy guys. I was just trading for the sake of trading. I was not having a solid strategy, So I would say that's the first thing that the forex trader must not do. If you don't have a strategy, I don't recommend you to fund real money. I recommend you to go to the YouTube space or wherever you can find information in order to actually find your strategy guys. Before you can even find your real money, you need to have a strategy guys. Now, what is a strategy? A strategy is some sort of an edge. It's some sort of what I would say a strategy is some sort of an edge. It's a tool that will actually help you to predict the market. You are not predicting 100% of the time, but then you are actually trying to see whether the market will go up or will go down using that particular strategy. There are different types of strategy that you can find in the internet. There are SMC, which is smart money concept. There's normal type, which is your technical trading, whereby you trading patterns, you trading, Then there's trend line trading, whereby you trade based off of trend lines. There are many strategies guys. There's ICT strategy. There are many strategies. Some of them I don't know, but then you can just go to YouTube and you'll find a lot of strategies guys. Don't trade without a strategy, because that thing will not go well. You wanna guess the market. I was guessing the market guys. I was like, this thing will buy now, then I click buy. Sometimes it will go in my favor, sometimes I would lose, but overall I'm just guessing, which means I'm not learning anything guys. So if you trade without a strategy, you are applying yourself to that. So don't trade without a strategy guys. Go and look for strategy first, then will be good. That's number one. Now guys, number two, which is very very important, and this one has I've been learning this thing for too long guys. Number two is to always follow your trend. Whatever strategy you are trading, whether you are trading SMC, ICT, or whichever strategy that you are trading, trend line or whatever, any kind of a strategy that you can even imagine, support and resistance or whatever, you must always follow your trend guys. Follow the trend. What do I mean when I say follow the trend? A trend consists of higher highs. A trend, it can either be an uptrend, downtrend, or a sideways trend. But in most cases guys, we're focusing on an uptrend or a downtrend. Now guys, in this case, you need to follow your trend all the time, because if you are against the trend, your strategy will never work guys. Your strategy working against the trend, nah guys, it's a challenge to trade against a trend, but then it's always easy when you're trading with a trend. Let's say for example, GBP USD is in an uptrend. What you must supposed to do, you must look for more buys compared to sells. I'm not saying you won't find sell setups. You can find them, they can hit take profit, but sometimes it is risky, because you might find out that the trend is willing to continue, and the trend will continue up until maybe, let's say for example, the trend might even take 20 days. You never know that the trend might take even 20 days. So it is important to follow your trend. Always trade in your direction of the trend. How do you mark a trend? You need to actually go and mark whether there's a low or there's a high, there's a higher high or there's a higher low. You need to always look at those kind of things. And sometimes what you can do, you can use trend lines in order to mark your trend. You can just use a horizontal trend line, like the above trend line and then the downward trend line, which this one will represent your higher highs and whatever, and then the downward one will represent your lower highs or your lower lows. So you need to always know your trend. It is important to know your trend, no matter how many times have you flipped accounts and stuff. You need to know your trend, because either way you will have to follow that trend, because it can show you a long-term move. How are you going to predict a long-term move if you don't know your trend? You see, you must always know your trend, guys. Now guys, know your trend. This is number 3, and this one is very, very, very important, because this is the one that determines whether you're gonna get an L, which is a loss, or you're gonna get a W, which is a win, guys. So in this one, whenever the market is in your area of interest, which is an area that you are interested in entering, let's say for example it has hit your entry point, now it is time for you to execute. What you must do when the price has reached that, because that's when you decide with can I enter now or can I wait? Now guys, here you must look for a confirmation, guys. Let's say for example your area of interest is a support. If it's a support, whenever the market tests that support, you need to look for a certain confirmation, guys. It's either you go to the lower time frame, you try to look for rejection candlesticks. I'll talk about candlesticks that are important in my next video. I'll talk about them, the most important candlesticks in the FX market. Yeah, now guys, when your market has touched your area of interest, then the area that you are interested in entering, maybe your order block, maybe your support, or your resistance, in whatever ways that you are trading. When the market has touched there, you need to look for extra confirmation, because sometimes the market can even break that order block, or the market can even break that support. But then, to be quite honest guys, even if you can look for extra confirmation, sometimes a loss will always be a loss. But looking for extra confirmation, it actually allows you to have that high probability. And there are times whereby you don't get an extra confirmation, but the market tends to move in your direction, guys. But to be quite honest, whenever the market has touched your area of interest, you need to go and look for a confirmation. It's either there's a candlestick that you understand that you are always looking for, maybe a reversal candlestick or a continuation candlestick if you're looking for a continuation, guys. Either way, you need to look for a confirmation. It's either you look it in the lower time frames, or you just wait at that higher time frame and then you wait for the candlestick to be formed, guys. There are a lot of reversal candlesticks, and there are a lot of reversal there are a lot of reversal candlesticks and continuation ones, guys. So you need to look for a confirmation. Either way, guys, this is what you should be looking for. It's coming straight to number 4, guys. Number 4, this is the most important one. You need to determine your stop loss according to your strategy, guys. Whether you're a lower time frame trader, which is a scalper, you're a day trader, which is a person that trades normally the 1 hour time frame, or whether you're a swing trader who focuses maybe on the 4 hour time frame, the 1 hour, the 1 day time frame, which is the daily time frame, or you are a position trader who focuses on the weekly time frame mostly. Either way, you need to always determine your stop loss, and your stop loss can never ever be as huge as your take profit. Let's say for example my stop loss is at, let's say for example I'm losing 200 in order to gain 100. You can clearly see with this setup is not going in my favor, because I'm losing more but then I'm gaining less. So that's not a normal risk. That's not a risk. But then if you get maybe a 1-to-1, a 1-to-2, or a 1-to-3, that would be extremely good, guys. Always determine your stop loss in the right way, guys. For me, if I would say I'm setting my stop loss, I will actually set my stop loss 30 pips away from my entry, depending on my order block. If my order block is narrow, I'll just set my stop loss at around 20 pips. But then if it's bigger, I'll just set my stop loss at 30 pips away from my entry. Then for my target, I'm targeting anywhere between 60 pips to 90 pips, depending on whether I'm targeting 1:2 or 1:3 as a risk ratio reward. So you need to make more than your stop loss. Either way, you need to make more than your stop loss. You can't be making less than your stop loss, because if you make less than your stop loss, when you lose maybe 3 times, you are already down the drain, because you know no matter if you win, it's going to take you more times for you to recover compared to not. So the reason why we make our TP bigger than our stop loss is to actually recover faster whenever we win. Whenever we win, we get more. Whenever we lose less. That's good, guys. You need to do like that. Otherwise, you won't be able to succeed, guys. Yes, straight to number 5. I'm not sure if the numbers I'm following correct, but then yeah, straight to number 5, guys. Number 5, this is very, very important. That's your exit point. A trader must know when to exit. Whether you're a lower time frame trader, a higher time frame trader, you need to know when to exit. They say a good dancer knows when to leave the stage. Now, in this case, guys, this is where you need to set your take profit, guys. A take profit is important in many ways, guys. Some would say don't put your take profit. You can actually make more, which is actually good. But then if you have insecures about not putting a take profit, put the take profit, man. Like, put the take profit, because that will save you a lot. Let's say the market now return exactly where you have placed your take profit. You will be happy because now you have secured something. So how do you put a take profit? A take profit, you just gonna look at your left side. Remember, when you trade, it's you look at the left side. Where was the highest point before your entry? Where was the highest point? Then you look at that highest point. You check with it, how many points does that high cover. If it cover enough points for you to place a TP, just place a TP right there, and then you are good to go. You will be able to secure profit, guys. So you need to always place a take profit, because the market can actually return at any time and go straight to your stop loss. The market doesn't care about you, guys. It always return anytime. You wouldn't predict when the market will return. Either way, you can have a powerful strategy, but if you don't know when to stop, you will always lose, guys. If you don't know when to stop, you will always lose. Just focus on take profit. Place that take profit. Don't mind people's idea. You place a take profit exactly where you want to place it. But then remember this: always your take profit must be higher than what? Higher than your what? Higher than your stop loss. You must place a take profit higher than your stop loss, because you need to make more money compared to losing more money. That's how it is, guys. Yeah, guys. This is number 6. Number 6 is very much important, guys. Number 6, you wouldn't even skip this one, guys. Now, number 6, this is the one that most traders do. Now, your lot size, guys. I've seen a lot of traders trading full margin, guys, which is actually good, and I myself have done it, guys. I've traded full margin. But let me tell you a secret of full margin, guys. The secret of full margin is that it's going to make you blow faster than you thought. Let me just tell you this, guys. In full margin, you need that one crazy signal that will actually make you profit. But how many times do you catch? How many times do you catch crazy signals? How many times do you catch crazy trade? Few times. Now, full margin is not sustainable, guys. Full margin, let me just explain full margin first. Full margin is whereby traders tend to risk 100% of their account. They open multiple orders in a hope of making more money, and that allows them to risk more, which means they risk the entire account in order to make more money. And sometimes it works out, sometimes it doesn't work out, but overall, over time, it doesn't work out, guys. Full margin is not sustainable. Now, in order for you to risk, let me just put it simple, guys. Let's say you have deposited around 1k, 1,000 rand. Let's say, for example, 1,000 rand. Now, guys, if you deposited 1,000 rand, guys, I would actually say don't risk, more than 15% of the account if you are starting out. 15% already, it's huge. It's very huge. But then now, because of your risk, you have funded a low amount, which is 1,000. Don't risk more than 15% because you're gonna cry. Because you wanna survive for the longest. If you wanna survive for the longest, don't risk more. If you wanna survive for the longest in the market, don't risk more than what you should, guys. In fact, there's a rule which is actually dope. You can actually find it there. They say you must risk 1 to 2% of your account. But now it gets challenging when you find it less money, because let's say for example you find around 300 rand, then they say risk 1 to 2%. How much are you going to risk? You're going to risk way less. But in this case, guys, don't risk more than 15% of your account, because you want to survive the longest. Now, if you want to trade full margin, I would suggest that you separate a certain amount of money that you want to go full margin with, rather than you going with your entire money. Do not risk what you can afford to lose, guys. Don't risk what you can afford to lose, guys. That's what, guys. Straight to number 7. This is the last tip that I'm gonna give you guys. From there, you will be set. This last tip is the one that separates winners from losers, guys. Guys, this is whereby now you have won. Let's say for example, yesterday you won around maybe 700 rand, which is maybe, I don't know, let me just say it's around 10% of the account. I'm just putting an example. Let's say you have won 700 rand. Now guys, if you have won that much, 700 rand, make sure that the following day you do not risk more than 700 rand in your account. You do not risk more than what you have won. In fact, you can risk half of what you've won, or even quarter of what you've won, and then the rest you can choose to withdraw and enjoy. Because what is happening, guys, is the only way you can know what you are improving in the forex market, whenever you hit a certain goal of amount, or whenever you hit a certain amount that you wanted to reach, you just need to withdraw that money and enjoy the money, because that's how you're gonna see that you're growing. But if you're gonna be the trader that always invest, hey, I'm gonna invest more, I'm gonna make more, whenever you win, you take that money, you invest it all again. What if now you lose it all? You see what you didn't enjoy nothing. What you had was that you managed to make money, but then you went back and risked that particular money, then you lost it. You need to always pay yourself, guys. Pay yourself. It is highly important to pay yourself as a trader, guys. Whenever you hit a certain goal, I'm not sure what's your target, but then you know your target. But then whenever you hit that target, guys, make sure you withdraw. Because if you don't withdraw, if you don't enjoy the money, where are you going to say, like, what's the proof of you saying now the forex market is really working for you? You don't know. But whenever you withdraw, guys, you would know. For example, for me, if I would make around, let's say for example today I've made 500 rand, and I know that I've been needing 500 rand, I would withdraw it, guys. I would withdraw that 500 rand. I would enjoy it. I would not necessarily spend it recklessly, but then I would spend it on things that are really needed. Let's say for example now I didn't have like earpods, I didn't have like this head, I didn't have like a jersey or something like that. I would go to the mall, buy that jersey for myself, you know, and that thing overall, it creates confidence. When you buy something in the money that comes from the market, it creates confidence, it creates that thing of, you know what, I can go for more, you know. That's when you know, okay, fine, I'm making money through our forex, you know. But then if you don't withdraw, guys, it's child, guys, because now you are always investing. Now you want to invest your whole money up until when, guys? You need to pay yourself. Don't go with that mindset of, you know what, the more you invest, the more you make more. Nah, always pay yourself, guys. This is very much important, because most traders, they don't pay themselves. Some trader would actually make more money that they've never made in a single day, and then they risk it all in the next trade, which is why. Pay yourself. Don't risk more than 50% of what you've made yesterday, because why? You want to see the growth. How are you going to see the growth if you keep on risking more? Don't risk more than what you should be risking, guys. Pay yourself. This is very much important. They must not tell you otherwise. Pay yourself as a trader. This is your boy KB, and guys, I'm closing this chapter here. If you didn't take anything, I'm telling you, you won't succeed, guys. If you didn't take anything here, I'm telling you, your journey will be as long, twice as long as mine, I would say. Yeah, guys, this is your boy KB, and thanks for watching up until the very end, guys. Make sure you hit that subscribe button. Make sure you hit that subscribe button, guys, and make sure you like this video and share the video with your mate, guys. Share the video with your friends there, man. So guys, please, I would like the support. Let's keep on growing the family. Road to 100 subscribers, guys. The only way that you could actually be successful in forex trading is when you actually, you know, allow yourself to learn. You know, you need to allow yourself to learn either way, guys. If you want to learn a strategy, you need to allow yourself to go and learn the strategy. If you want to learn a certain thing, allow yourself to learn. If you want to learn risk management, allow yourself to learn. Don't actually think that you are a guru or you are a king of forex. Nah, you can actually kill the market maybe, let's say, 6 times in a row, but then find out that it was some sort of like, you know, involvement of luck. Guys, this is your boy KB, and I am signing out, guys. See you next time, guys.